Hello and welcome to this IBP for Finance series of videos from GitaCloud. This Part 4, Business Control Tower, is aimed at finance and IBP practitioners. SAP IBP enables a business control tower capability to manage business performance across operations and finance teams. This enables S&OP and FP&A processes to be run with a single unified IBP process and enterprise model. You can now not only generate demand forecasts and supply plans in IBP, but also instantly see the projected business performance across P&L, balance sheet, and cash flow statements. This enables decision makers to understand historical versus projected performance trends for key KPIs at an enterprise level, such as return on invested capital. It also helps understand the drivers behind any unfavorable trends in business results, such as operating margin erosion, or increase in cash-to-cash cycle time. Before we jump into the business control tower visualizations, let's quickly understand the profit and loss statements across the years. You can see the suboptimal performance in 2021 due to COVID-related shutdowns. Also note that gross margin is growing, but operating margin is shrinking in 2023, as compared to 2022. This is due to much higher SG&A expense in 2023, as we expand into new markets to deliver a better revenue top line. This view packs too much information, which makes it hard for decision makers to process the information efficiently. Let's see how Business Control Tower can help. Let's evaluate revenue and profit trends. We will focus on the following KPIs: sales revenue, revenue growth, gross margin, operating margin, and net margin. You can see the definitions of these KPIs at the bottom of this slide. It's easy to see 2021 was a challenging year given negative revenue growth and negatively trending values for margin KPIs. You can also see that sales revenue is growing nicely and gross margin is stable from 2023 onwards. However, operating margin and net margin performance is deteriorating in 2023. This is because the SG&A costs have gone higher, since we plan to expand into new markets. This is an example of a company choosing growth over profitability in 2023 and beyond. Business Control Tower in SAP IBP can showcase complex relationships and performance trade-offs to help improve decision-making processes. For example, see profit versus inventory trade-off on the left. This is measured by operating margin performance versus inventory turns. Ideally, we want high margin at high turns in terms of an ideal performance zone, as shown in green color. Notice a high operating margin in 2022, but with lower inventory turns. Higher inventory turns in 2023 onwards are coming in at lower operating margin. Given the performance from 2020 till 2022 is all over the place, this is a cause for concern and something for the decision makers to look into. Similarly, see ROIC versus revenue growth trade-off on the right. Again, we want high returns along with high growth in terms of an ideal performance zone. We got close to it in 2020, but regressed severely in 2021. And projected performance over the next 3 years is quite volatile. We need to find ways for tighter performance here, as you can see a large difference between ROIC for 2024 versus 2025. Hope you have a good sense of how to manage P&L performance with IBP. Let's focus on the cash flow aspects now. Traditionally, S&OP and FP&A processes are set up with different models in different solutions. This fragmented planning approach makes it really difficult to translate sales inventory and procurement volume plans into an accurate bottoms-up cash flow statement. Business Control Tower in IBP is based on a unified planning model for the enterprise. This enables an automatic and instant translation of S&OP volume forecasts into cash flow relevant KPIs, such as cash-to-cash cycle or operating capital cycle. You can see the KPI definitions at the bottom of the slide. Lower values are better for cash flow, as this means we are generating cash faster. Days payables outstanding is an exception, as higher values are better. Accounts receivables and account payables can be projected based on customer and supplier specific payment terms in this model. We can see that the cash-to-cash cycle took a giant hit in 2021, as both our inventory and receivables grew out of control. We mitigated this impact somewhat by stretching accounts payable. We have focused on the inventory levels and managed a significant reduction in 2022, which is on track to go even lower in next 2 years. This is helping bring cash flow under control. Let's quickly understand the cash flow statements across the years. Calculations for cash flow KPIs such as operating cash flow and free cash flow are explained on the left. We had a negative cash flow in 2021 due to COVID-related shutdowns. Again, this view packs too much information, which makes it hard to get insights regarding cash flow trends. Let's see how Business Control Tower can help. See the same cash flow information visualized in Business Control Tower. Remember, we had a difficult year in 2021 with negative cash flow, meaning we lost cash. See the widget on the right, which shows cash flow versus cash on hand. We had dwindled cash down to unacceptable levels in 2021. Both operating cash flow and cash on hand did recover quite nicely in 2022. See balance sheet data by year. Calculations for total assets and liabilities are explained on the left. Note current assets, as in cash, receivables, and inventories were quite unfavorable in 2021. We were forced to stretch accounts payable to mitigate some of this impact. Note we have taken on additional debt in 2022 as we look to expand in new markets. See balance sheet trends across years in terms of assets and liabilities growth. We show the assets on the left side. Cash is represented by blue color. As you can see, cash went significantly down in 2021. We are operating with relatively high cash reserves since 2022 to mitigate liquidity risk. Receivables and inventory are growing in sync with projected sales revenue 2023 onwards, they are under control. We plan to expand production capacity in 2023 to support higher sales volume. You can see a step change in net fixed assets in 2023 that reflects the capital expenditure to support this expansion. We also have smaller CapEx planned in 2024 and 2025. See liabilities on the right side. Accounts payable are growing in sync with projected COGS 2023 onwards, this is also under control. We took on additional debt in 2022 to support our production capacity expansion. This debt will also help scale our sales organization to support our go-to-market strategy. We plan to enter new markets, which is the driver for higher unit sales assumption 2023 onwards. It's okay to see trends visualized for KPIs, but it's more important to understand if this means good health, a warning indicator, or critical issue warranting action. We can achieve this with threshold analysis. IBP lets us flexibly define thresholds to assess when historical or projected performance for a KPI is in yellow or red band. For example, you can see the days inventory on hand performance on the left. We defined 100 days or less of inventory as green, which shows good health, between 100 and 200 is yellow, which serves as a warning, and higher than 200 is a red, which is a critical alert. You can see that inventory was in red in 2021 and is consistently improving 2022 onwards to find its way back to green in 2025. You can similarly see net margin performance in the middle. We seem to be regressing compared to 2022 and stuck in the yellow warning band for the next 3 years. This is because the company chose growth over profitability for next 3 years, which is okay, so long as this is understood and approved by all decision makers. You can also see the earning per share performance on the right. The company did not meet expectations in the last 3 years, but are projecting strong performance going forward. This is a result of the sales growth, reflecting larger absolute values for dividends, driven by growing net income 2023 onwards. You can visualize a range of other KPIs, such as return on equity, revenue per employee, fixed asset turnover, debt to total capital, and so on. It is important to not get carried away and clutter the business control tower with dozens of KPIs. 80% of the insights usually come from 20% of the KPIs on a typical executive dashboard. We recommend to create metrics hierarchies enabling drill down to lower level KPIs, but put less than 10 KPIs front and center in the top view of a business control tower. KPIs selected should be the one that encourage well-balanced performance at an enterprise level and discourage optimization within a given function. For example, we can always reduce inventory days, but we do not want to do this at the cost of missed sales and customer dissatisfaction. Another example is we can always grow profits by reducing direct labor costs, which may be enabled by state-of-the-art automation in the factory, but this cannot come at the cost of a lower return on assets, if such equipment is quite expensive. In conclusion, we showcased a business performance management approach that converts operations volume plans into projected financial and business performance, all within a single unified model. You can now merge your S&OP and FP&A processes into a single monthly IBP process. This helps ensure a single set of assumptions and plans are driving the enterprise across operations and finance teams. This business control tower showcase was powered by the embedded SAC capabilities of analytics stories made available recently in SAP IBP. See Part 5 of this series to understand how to quantify performance risk through scenario management and sensitivity analysis. Learn how to model a range of macroeconomic conditions, actions you can take in response, and the performance trade-offs due to such actions. This greatly helps to have a ready playbook to deal optimally with most of the likely futures, and improved resiliency in business performance as a result. You can find more such explainer videos at GitaCloud website or GitaCloud YouTube channel. You can reach out to GitaCloud team if you would like to see this unified planning model and understand how it enables truly integrated business planning and a business control tower capability with SAP IBP. Hope you enjoyed this video. Please like and share if you did. You can also subscribe to GitaCloud YouTube channel. Thanks for watching. Have a great week.